A very good evening to all investors present here. In today's event, our CEO, Dr. Mohit Batra, will reveal the first stock of the month for 2025. Towards the end, we'll also be having a Q&A session. Over to you, Mohit.
Thanks a lot, Jason. A very good evening to all of you. आप लोग सब डरे हुए क्यों हैं? Why are you guys so scared? My webinar number today is 1/3 of the normal attendees. We are getting into a very retail mood of running away from listening to anything when the markets are down. You're being flown by the emotions. And this is the time, whatever theory we may teach you, and we've been doing this over years now, this is the time to implement that. Markets have corrected decently. Markets, BSE 500 over the last 1 month is down 6.7%. Mid cap index is down around 7.7%. Small cap index is down by 8.6%. Individual stocks are down way beyond that, way more and above that. What is the worst that can happen from here? Maybe some more fall, but these are the opportunities which makes us brave investors to do either of the two things. If you are less brave, stay put and stay invested. And if you are more brave, increase allocation gradually now. Because these prices, when they turn around, and you've seen how volatile the market is, markets, are doing a yo-yo. There's a lot of froth that was there in the markets that we've been talking to you for the last 1 year now almost, has been coming in control. Valuations were high. They've been coming in control. Result season is starting. Budget is around the corner. Trump joining on 20th is around the corner. Lot of events are creating a knee-jerk reaction in the market. And we need to see, as investors, we have to find out our strength in terms of what best we can do during these times. So if I have to put 100 rupees, I would typically put around 40 rupees now. If I have to put 100 rupees, I would easily put 40 rupees now. Right? There are times where good companies, there's a dartboard approach. You know the dartboard approach, that you throw the dart and any company will do well from there onwards. There is a dartboard approach that comes in. And if you look at what's happening in the market, stick to great quality companies, great score companies, and you will not go wrong in the long run, because when they bounce back, they'll surprise you. The mood will reverse completely. And the downside risk now from here is still there. I'm not denying that it is not there, but the allocation greed, which makes great investors wealthy, should be starting to prop into us. So with that note, wipe off that sadness, that worry from your face, put on some smiles, because I'm going to talk about a great company today. It is a company that I think we should all watch out for very closely because of various reasons that we'll discuss today. I'm very excited to do the first stock of the month for the year 2025. And I personally feel that this company is a great pick that we've done in the recent times for stock of the month. With that note, let's start. A brief disclaimer. We emphasize that all investors should use the information on the webinar merely as a resource to enhance their own research and understanding. Nothing discussed on this webinar should be considered as investment advice. We strongly advise all participants to check with certified experts before taking any investment decision. Investment in securities is subject to market risk. Past performance should not be construed as a guarantee for future returns. Investment in equity and equity-related securities involve a high degree of risk that the user should not place funds to invest unless they can afford to take the risk on their investment. Past performance is no indicator of future performance. And please note that we may be holding, or Mojo PMS may be or may not be holding this company in their portfolio. Before I move forward, we had launched a New Year offer only for the webinar users. This offer is only available for the webinar users. We are ending this offer now. It's my job to tell you what the offer was if you've not seen that offer. 16,999 for 1 year, plus get 2 years free. So totaling to an astounding 3 years for 16,999, which collaborates to almost a 70% discount. As I said, this is a webinar offer, which means it's only for paid users. It is only for Mojo One users, and it is only for those Mojo One users who are attending this particular webinar. This offer is not available on the website. We will shortly be closing this offer. Jason will put up the links for you to subscribe during the webinar period itself. Please make sure that you would have subscribed to it. Now, before we dive into the current stock of the month, to the cost that I can tell you, it may be one of my favorite stock of the months over the last maybe 3, 4, 5 months. Let's look at the historical performance, especially after what has happened in the market over the last 1 month, where the broader markets are down on an average from 6 to 8%. So eClerx services, let's ignore that. That is not even a month old into the system. But apart from that, if you see, we have only one stock which is in negative, which is Gulf Oil Lubricants. Rest, all the stocks are outperforming the benchmark, even despite benchmark being negative in some of the companies like Dixon, which is 12% up versus benchmark of 18%, versus some 1-year-old companies like Persistent Systems, which is now up 94% versus index up 16%, Praj 55% versus benchmark up 27%, L&T 25%, Dr. Reddy's Lab 45%. But the interesting thing out here, as I said, apart from Gulf Oil Lubricants, all our stock of the month picks have been beating the benchmark very, very handsomely. And that is astounding news for stable and long-term investors. This is not stock of the week. This is a typically long-term call that we do. Proof of the pudding is also in the closed calls. We closed some positive calls and some negative calls historically. Varun Beverages as 355%, Garden Reach 213%, Exide Industries 175%. So you can see on the left-hand side, the greens are in triple digits and decent triple digits, and the reds are highest of 31% negative, which was Nelco, eClerx Services 25%, Oil India 17%, Lux Industries 14%, and then a host of single-digit negatives, which happens all the time. But on an overall basis, stock of the month is today one of our most rewarding products in the Mojo One bouquet. Right. Let's go to the current stock of the month. We are recommending a mid-cap company from the infrastructure sector. Now, very, very interesting things can happen to the infrastructure sector. So we'd advise you to watch out for this particular stock of the month and listen to the full commentary because of the upcoming budget, where the allocation or towards infrastructure development in the country can go up from 1 lakh crores, which was allocated in 2024, to almost 18 lakh crores in 2025. So 18 times extra infrastructure support or spending can come from the government of India, which typically can tell you that some of the key companies, how they can benefit out of this large 18 times spending that can come across the country. And this is not a 1-year phenomena. This is not a 2025 phenomena. We are personally expecting in the budget a 5-year full plan, a much larger capacity plan to be put in place. At 1 lakh crores, you are at 3% of the government of the GDP. And at 18 lakh crores, you can imagine how large that spend is and how some of the companies within the infrastructure sector can largely benefit in the next 3 to 5 years. Now, let's look at this company. Market cap of 7,619 crores. Current market price of 271.40 at today's close. A price to earnings ratio of 8.77 versus industry PE of 62.23. 8.7 versus industry PE of 62.23. There is a very, very large opportunity that lies if we play this particular stock of the month right. Industry, as I said, was infrastructure. Return on equity is a very, very good 34.4%, and net debt to equity a little higher on 1.64%. Dividend yield is zero in this particular company. So key point to note is this company is available at one of the lowest possible valuations within the infrastructure sector. Not just the valuation, but we'll have to see the whole story which is brewing up, because the story has just started unfolding in this company, for which we have chosen this as the stock of the month. Investor profile that we are looking at today is high risk, high reward. Only if you fit into this particular investor profile, please take a call on this stock of the month. But this is for a high risk, high reward investor. Let's go and look at a brief introduction to the company. The company is engaged in the business of construction and infrastructure facilities on EPC turnkey, BOT, which is build, operate, transfer, and hybrid annuity model, which is known as HAM basis. The company majorly undertakes construction of highways and bridges, power transmission and distribution, railway work, city gas distribution, and smart infrastructure projects. So very well diversified in the scope of work towards the whole infrastructure theme that this company operates in. The company's client includes National Highway Authority of India, Karnataka Road Development Corporation, Ministry of Road Transport and Highway, Tamil Nadu Road Development Company, etc., among many others. It's not a company. It has got a 45-year-old track record, and so far the company has already made 20,000 lane kilometers of highway and 50,000 kilometers of electricity power line network. So 45 years of patronage and very, very large work that has been done across highway construction of 20,000 kilometers and electricity power line network of 50,000 kilometers that has been so far undertaken by this company. Exceptional quarterly performance. Now, if you see the current last 2 quarters, the sales grew by 1%, but operating profits has grown by 51%. So sales grew from 2,489 crores to 2,465 crores. This is a 9,000 crore top line company. So it's not a small company, it's a 9,000 crore top line company. Operating profit sitting at around 905 crores grew by 51%. And net profits grew from 158 crores to 462 crores, which is a 192% quarter-on-quarter change. On a YOY quarter, which compares September 2024 over September 2023, sales grew by 16%, operating profits grew by 66%, and the net profits grew by almost 300%, which is 288% to be precise. A part of this is also because the company monetized a land parcel worth 453 crores, which realized a profit of 370 crores in the quarter. The company has a lot of land parcels as well. And stable depreciation and finance cost in the quarter led to faster growth in profits. What are the key highlights of the September quarter results? This company is declaring the next quarter results, I think, on the 29th of Jan. So we should be watching out for that. Improving interest paying capability, the company's ability to pay back its interest payment obligations is improving. EBIT to interest ratio has increased from 1.7x in September 2023 to almost double, which is 2.95x in September 2024. Major margin improvement from 25.3%, which was recorded in September 2023, to 36.4% recorded in the quarter of September 2024. And a very large improvement in profit margin, 5.5% recorded in September 2023 to a 18.6% in September 2024 quarter. So very, very large improvement in the profit margins. Let's look at the half-yearly performance. If you look at H1 FY 2025 over H1 FY 2024, sales have grown by 21%. So 4,000 odd crores has gone to almost 5,000 crores. Operating profit grew by 50% almost, 1,000 crores going to 1,500 crores, and net profit has gone up from 168 crores to 620 crores, which is a astounding growth of 269%. Now, revenues in the first year grew by nearly 12%, which excluding the impact of the land sale profit, because we know that 370 crores of this also came in from the land sale profit. If you remove that, you're still seeing a 12% growth in the revenues. The company has managed to bag a significant order wins in the first half of the year. These order wins will contribute to significant revenues in FY 2023, 26, and 27. I will talk to you about the details of these order wins that they've got, but they don't reflect currently in these financials. They would start reflecting in the FY 2026 and 2027 financials. Let's look at the key highlights of the first quarter or the first half of FY 2025. Focus on debt reduction. The company has continuously reduced its debt indicated by the debt equity ratio, which has come down from 4.07 times in September to 2.65 times in September of 2024. In improving collection from debtors, company has demonstrated improved efficiency in collecting receivables from its debtors. Debtor turnover ratio, which is a ratio that we look at to figure out how the efficiency in collectible receivables has increased from 7.02 in September 2022 to almost 9.75 in September 2024. Let's look at revenue breakup. Very, very well segmented. Road, EPC, and HAM is 49%. Power EPC, 28%. Railways, 12%. And others at 11%. As per FY 2025 Q2 financials. High promoter stake, very decently placed out there at a 54%. FIs hold 8% of this company. Domestic institutional investors hold around 18%, and public today holds around 20% of this company. As of June 2024, HDFC Balanced Advantage Fund held 7.79% stake in the company, followed by Kotak Multicap Fund, which held a 5.18% stake, and SBI Infra Fund holding a 3.03% stake in the company. Okay, now let's look at the main reason that I was talking to you about when I started, that why I feel that this is a great opportunity to look at a company that over the next 2-3 years has the possibility of generating enough investor wealth. Government obviously has a very strong focus on infrastructure, demonstrated by allocation of rupees 1.11 lakh crores or 3.4% of GDP to undertake infrastructure projects, which happened in the budget 2024. We expect this allocation to go up to around 18 lakh crores in the budget 2025, which will be announced on 1st of Feb 2025. So if that comes true, then obviously the whole infrastructure company, and especially this company, may get a possible boost because of what the expected revenues can look like. This company completely falls in line with the infrastructure funding or infrastructure capex that the government is planning to do. In the budget announced in July 2024, the FM has guided to maintain such strong fiscal support for infrastructure over the next 5 years. So this is not a 1-year FY 2025 guideline. This is a 5-year guideline that we're talking about. And the government has indicated certain projects such as expressway corridors, industrial corridors, repairing national monuments, housing schemes, improving rural connectivity through roads, airports, medical institutions, among a few others. This bodes very well with the company that we are talking about today, as well as the overall infrastructure sector. The order pipeline that I was talking to you a while back. If you look at September 30th, 2024, the company's order book stood at 11,104 crores. In the second half of FY 2025, the company has secured additional projects worth 11,400 crores, with certain projects holding L1, which is the lowest bidder status, further enhancing the order book. So there is a large order book that the company is sitting on, which will result into the financials for the next couple of years. These orders are also diversified across roads, 46%, power transmission and distribution, 41%, railways, 7%, building EPC, 6%. This diversification obviously underscores the company's comprehensive expertise across the multiple infrastructure domains. In November 2024, the company secured two significant projects from National Highway Authority of India for development of four-lane economic corridors along the NH 116A in West Bengal, cumulative worth of rupees 2,791 crores. So a very, very strong order book, continuous order wins, diversified across sectors, coupled with robust execution capabilities of the company makes it a very, very strong financial case for us to look at this as a long-term play that may be unfolding within the infrastructure, large play that is obviously unfolding across the country. Divestment in SPV, special purpose vehicles and land. The company has announced divestment from 11 SPVs, special purpose vehicles, which contribute to 18% of the total revenues for a consideration of closer to 2,324 crores. In the earlier quarter, 5 SPVs under one of its material subsidiary were offered for sale for a consideration of 2,539 crores. These sales are going to bring down the debt by approximately 3,000 crores before March of 2025, and the rest is expected to come down post March of 2025. Sorry, that is March of 2026. The management also expects a reversal of accounts receivables provision to close to around 250 to 300 crores. The company has further monetized the land at 453 crores, which is what we have already taken into the quarterly results, booking a profit of closer to 370 crores. So the company currently totally, if you see, holds a land bank of around 210 crores, which they would try to monetize in the next few years to fetch 3 times to 4 times profits on that. That obviously will add on to the net profit line or the bottom line of this company. This one is very commendable. The extreme low valuations at which this company is trading right now, which makes it a very, very strong case for us to look at. The company is currently doing revenues approximately upwards of 10,000 crores per annum, with profits upwards of around 900 crores per annum on an annual basis. This is the company which is doing a top line of 10,000 and a bottom line of around 900 odd crores. As of 10th January 2025, the company's market capitalization stood at 7,619 crores, fetching a price to sales of just 0.71 times and PE of just 8.77. So PE of just 8.77 and price to sales of just 0.71. Now, if you look at some of its competitors, if you look at listed, peers like Larsen and Toubro, PE of 36 times versus 8.7 times of this company. If you look at IRB infrastructure developers, PE of 52 times versus 8.7 times, and Afcon's infrastructure PE of 40 times versus 8.77 times. And you're talking of an industry which is running at a PE of almost 65 times. So very, very large, a gap in between where the company is trading versus where its peers are trading and versus where the overall sector is trading, which is, even I would say, 9 times difference as far as the sector is concerned. And if you look at some of the closest peers, it is around 6 to 7 times cheaper, 6 to 7 times cheaper if you look at some of its closest peers. With superior execution capacity and a robust order book, we believe that the company deserves to be trading closer to the valuation of its peers, if not higher, but definitely closer to the valuation of its peers. All right. Now revealing stock of the month. Some of you may have already guessed it, but the stock of the month for the month of January 2025 is Ashoka Buildcon. Let's look at some of the key elements of this company. Quality good, valuation obviously very attractive, quarterly financial trend outstanding. Technically, it's in a bullish zone with a sector which is also in a bullish zone. This company has the highest score on MarketsMojo today, a score of strong buy at 91. So fundamentally, we are assessing this company not because of the last 2 quarters. We are not assessing this company or what's happening in the order books and the valuations for moving forward. We are not just assessing this company for the SPVs and the unlocking of land parcels. We are not just assessing this company for its track record and the diversification that they have in their business. We are not just assessing this company for the budgetary reasons, but fundamentally over the last 5 years, which the score takes into account, it is still one of the largest scoring companies on MarketsMojo at a score of strong by 91. Let's look at some of the peer comparisons. Ashoka Buildcon, the stock of the month for 2025 January versus L&T, IRB, Afcons Infrastructure. Revenue pretty much in range apart from Larsen & Toubro, which is very high, 2,21,000 crores, but Ashoka Buildcon at 9,000, 10,000 odd crores, higher than an IRB and Afcons at 13,000 crores. Net profit FY 2024, 521 crores, which is looks like going to around 900 odd crores now. IRB at 606 crores, Afcons at 450 crores. Price to sales 0.7 for Ashoka Buildcon, Larsen & Toubro 2.04, IRB at 4.28, Afcons as 1.38, and 12 months trailing PE of 8.7 versus Larsen & Toubro of 36, IRB of 52, and Afcons of 40. Market cap 7,600 versus IRB of 31,000 because of the valuation, and Afcons of 18,000. So very, very large opportunity if this can be played right. How the stock has performed consistently, the stock is doing well. There are no drops, no spikes, but it looks like a very consistent story that is building up. And we personally believe that this story can be way, way stronger given the next 1 to 2 years and the various factors that we discussed with you over this presentation. So summarize, Ashoka Buildcon is the stock of the week, stock of the month for January 2025. Mid-cap stock, 7,600 crores of market cap, industry infrastructure, current market price of 271.40, investor profile, high risk, high reward. Before I end the presentation and we start the Q&A, for people who've joined late, the New Year's 2025 offers are ending now. This is one of the best that we could do and which we have done since 2015 to 2025. For 16,999 for 1 year, we are giving 2 additional years completely free. So 16,999 becomes a price for 3 years. But please note that this is not available for even Mojo One members on the site. This is only a webinar offer as we always do it. Webinar offers in the history of MarketsMojo are the lowest offers and they only happen when the webinar is going on. So you would find a link. Jason will upload a link. And if you're interested, please make sure that you use this as much as possible to extend your subscription packs. With that note, Jason, we can hop across to the Q&A session.
Okay. Starting off this first question with Bridge Mohan. Hi Mohit. MarketsMojo is an excellent tool for traders and investors from my experience. Though I joined Mojo One hardly 2 months back, it has taken out greed and fear element from my mind. I have a question. Last month's stock of the month e-clerks was a Mojo stocks, but subsequently during the month it lost its Mojo stock status. There's no exit call for the stock from going to, I think, buy to hold from the stock of the month. Is there any specific reason for not giving exit calls?
Sir, I think we have in the past addressed this question a lot of times. Since you're a new member, obviously we've not addressed this question in the recent past, so my apologies for this. Let me just explain you the concept of Mojo stocks. Mojo stocks is a list of stocks. It is a limited set of list of stocks. A stock that comes out of Mojo stocks doesn't mean that you have to exit that stock, because this is a top stock list. So if there is some other top stock comes, then the stock which is at the end moves out, but it doesn't mean that it's an exit. So that's point number one. A lot of our investors get very scared when something goes out of the Mojo stock list and say that, Abhi, why aren't you telling us to sell the stock, right? So, but that is essentially not the case. We don't recommend selling a stock just because it has come out of the Mojo stock list, because as I said, it is a list. If I today say that there are 50 kids in a class and if two new kids join, I need to keep 50 as the number. So, the bottom kids, two kids come out, right? But doesn't mean that I will separate out and create another section for them. So there's a maximum size that we play in the Mojo stocks. Essentially, when the stock exits Mojo stocks, unless it is a sell on the site, it is not to be sold. That's, I think, your point number one. Sorry, can you repeat the question? I wanted to say something else. Jason,
Yeah.
the last part of the question.
There's no exit call for the stock of the month if it exits the Mojo stock status.
The second call that is that stock of the month is not a pure IP driven call. If you see the stock of the month narrative and if you see the commentary that I give you here, it's a futuristic commentary. So there can be situations where the stock is becoming a hold or whatever it is, but there are, like the big commentary that I gave today about the sector, about the budget, the IP cannot capture all of that. So there can be possibility where we hold a stock of the month for its future potential, which cannot be embedded into the IP of the product, which is looking at pure data science. And hence the calls can be a little different when we take a call on stock of the month, which has got a little bit of a manual, business case to it, as you've seen today, versus a overall MarketsMojo product that typically works on the data science and the IP side.
Okay, moving to this next question by Moni. Good evening, Mohit. Apart from the high-rated Mojo stocks, which are the other stocks I can look at investing in this condition?
I think if you were to look at another stock list, if you were to typically stay a little safe but stay a little greedy at the same time, look at the reliable performers. Reliable performance are consistent performers, and they do equally or sometimes better than even Mojo stocks. It is a great list of stocks that I think a lot of investors today are not looking at. But in this scenario, I would typically shy away from the turnaround stocks, right? Because those stories will get beaten down or will get muted in the current market scenario. But people typically seek shelter in very solid performing companies, and that is Mojo stocks and that is reliable performers. So those are the two things that you should be for sure tracking. Please keep tracking. In Mojo Times, we've also is a personalized financial daily that we've created for all of you. I would beg you to please upload your portfolios, because then it is very easy for us to know what's there in your portfolio, and we can start, the system can start giving you recommendations of what you're doing out there. Because most of the time, investors don't upload their portfolios, they track their portfolio somewhere, advice they take from somewhere. So that doesn't fit very well. If you are an equity investor, where you are taking the advice, that entity, which is MarketsMojo in this case, should know what you're holding, because otherwise there's no way I can or the system can recommend you out there, right? So please take that effort of uploading your portfolio so that we know we can guide you at the right time what to do. Result seasons are on. Please understand it is very critical for us to know what you're holding. Result season has just started. There's a lot of halla gulla up and down that will happen in this result season, because we are not expecting some great result season this season, right? So you will have to cherry pick the great stocks, and it is a very tough task to do that as a normal investor. It is our job to know that if you're holding 20, 30 stocks, which one can you switch into what, right? Where the stocks are losing the sheen or the financial performance is coming down, and which one are the stocks that are coming, which are displaying great financial performance. Very critical to know. So, next 2 to 3 weeks, we have to keep our eyes and ears open, because most of the results, quarterly results, will come out, and whatever movements that we have to do within our stock listing and portfolio should be done in the next 2 3 weeks, or maybe at maximum 1 month, because typically, by around Feb 10th, Feb 15th, 60 70% of the results, quarterly results, are out.
Okay. Moving to this next request by Sunil. Could you please add stop loss in stocks of model portfolios in stock of the month? I'm also looking forward to the portfolio of Mojo One stocks.
Yeah, portfolio of Mojo One and a very aggressive portfolio is underway. I think we are planning a launch of that somewhere in the first week of Feb. We will get back to you with the details of that. As I had said to various investors, I was till the time I'm not happy with the performance, we are not going to launch it. And we are closing in to that. Now, the thing about loss booking is that typically it's in model portfolio, we've so far not introduced loss booking, and I personally feel that that's a good option to do that, because there are chances where stock adversely goes down versus the benchmark, and we can book losses out there. Although our model portfolio returns have been astounding, they've been very, very good. So I would like to do that, but sometimes I don't want to disturb something that is going so well. It's a tool that for retail investors is one of the best tools that we've created, the model portfolios. But I will definitely give you my word that I will try and see if putting in a stop loss works out there. Second approach that always is in my head is that why don't I give the flexibility to individual investors to put their own respective stop losses? If you feel that, because see, the thing is, it's a model portfolio. We don't know. It's a model portfolio that works the same as aggressive or conservative for everybody. You know your risk profile, so sometimes it is better for you to put the stop loss out there. So I'm in double minds out here, frankly. But I think I will lean one way or the other very soon.
Okay, this next question by Kunal. Can we average down a stock which has gone beaten down stock of the month or stock of the week?
See, the I would say if you have chosen a stock of week or stock of the month, which is both, which we have taken a call because of some future events unfolding or the financials or the fundamentals improving, I would say if you are getting the same stock 5 7%, 10% down, why not? But mostly I am completely against averaging down any stock, right? Because averaging down any stock never works. But today, even if you were to look at averaging down, if you see some of the stocks which have typically still shown resilience, I'd look at that little bit of resilience. So, for example, I'll give you an example. Today, I was looking at a certain stock, which in the markets, which is say mid cap, small caps have gone down 8%. The stock has gone down, say 9%, 7%. Brilliant, right? Because when the index falls, one rule that we all have to remember, that when the index falls, individual stocks always fall more than that, right? We all forget this. So what we do is that when we run a concentrated portfolio, you always say that, "Arey yaar, why is that you're more down than the index?" Arey sir, index to 500 stock ka hai, right? If you compare BSE 500. So in 500 stocks, if you create a 10 stock portfolio, 20 stock portfolio, chances of going down is 3 times more, 5 times more than a broader index of 500 companies, because average out ho jata hai. So when you look at a stock, if I were to pick up more during these times, look at the signs of resiliency. If the index has gone down 8%, the stock is down 20%, I would say wait. right? Let it come up little, itna greed theek nahi. But if the stock is showing you resiliency, that it is kind of, not trying to fall more than the benchmark, I would prefer those stocks, even if they would have broken a little lesser, but that resiliency and strength, immediately you will see next day. That stock will, bounce back because वो tug of war हो रहा है. And small cap and mid cap, if that tug of war is happening, that is very good because that shows me that the stock is very, very strong and it is holding itself compared to the average index of small cap or mid cap and all the stuff. The stock is holding itself on a standalone basis. There, the fundamental strength is very critical to see. So there is a finer point when you look at a stock coming down. Should I buy it or not? A great stock, index down 8%, during the same time the stock down 20%, I would still wait. मुझे इसको थोड़ा इसको रिकवरी दिखाने दो. A great stock which is down maybe 8, 9, 10% versus index down 8%, I would love it. I would typically say this is a greater chance of it to bounce back immediately when a little positivity comes back in the market. I hope you got that finer point. It's very important for us to know the resiliency of a stock sometimes.
Okay, moving on this question by Venugopal. Hi Mohit, happy new year to you and everyone at the Mojo team. I really like the Mojo Times. It gives a snapshot of the day's event and portfolio performance. Do you think this year the US market would perform better than Indian markets? Any opinion?
Oh, no, sir. I am 100% sure it will not. I don't think so. It will. I think US is up for a large challenge, and I think the heroic acts that may be done by Trump when he comes in about putting in subsidies into China and so on and so forth, duties and all of that stuff is not something which is an economic freedom or an economic growth point that comes in. So I personally, and that's loss of revenue for the country. So I personally feel that US will definitely not do better than the Indian markets in the coming year.
Okay. I'll just pick this next question by Krishna. If I'm already holding today's stock of the month, do I have to increase the stock in my portfolios?
Sir, I don't know how many stocks you're holding in your portfolio. I would need to know. Your question is very broad, sir. That if you're already holding stock of the month, do you need to increase stock of the month? I'm sorry, I'm not able to understand. Maybe you can explain me a little better for me to pick up this question again.
Okay. I request the investor to put in a bit more details. Till then, I'll move to the next question by Kawaljeet. It's a really big question, but he has a lot of suggestions and queries which might help the investors.
All
Uh,
right, sir.
Similar to the first one is similar to top 10 Mojo stocks. Can we have top 10 stocks in the category of each of our different strategies?
Very, very good question. So basically, what you're saying is that, and this is something that is in my to-do list, which is my personal, you know, objective was to come out with top 10 turnaround stocks, top 10 momentum now stocks, top 10 reliable stocks, and top 10 Mojo stocks, right? And I think it's a great idea. I must tell you that it is in the to-do list and I will definitely crack it. Now, whether you just give me a quarter, maybe 2 to 3 months, and I will do that. You guys give excellent ideas. There's no doubt about that most of the product of Markets Mojo has been made by these kind of ideas. It's not an easy thing to do because within you have to create a super IP on the IP to figure out which are the top 10 turnaround stocks that you will give because can't filter it on date. You have to filter it on the opportunity. So there is a super IP that we need to make sit on the current IP of all these products. But I think it's a great idea to implement. I'll definitely look into this, sir.
Okay. The second part was, can we have an option to search any stock from the different strategies we already have instead of searching across 4,000 stocks?
Say that again.
Can we have a search option to search a stock from different strategies like Mojo stocks or Mojo One stock of the week?
Ah, okay. You're talking about a super search within the four strategies, right, Jason? That's a very interesting idea. Okay. Okay. All right. We'll note that down.
Yeah. And another part of the question was that if any stock is strong by and not in any strategy, what are the important parameters which is could be missing in the stock? Or are there any additional things you look to ensure that a stock is part of a strategy?
We look at multiple points. So see, there are four strategies that we have. Let me take the easier ones first. Momentum now is companies that are in current financial trend momentum. So there, we may not look at the quality of the company that seriously. Like in the last 4 5 quarters, the company has been doing very well. So there is a bit of a fundamental momentum that is coming in, and we couple that with technical momentum on that stocks. That's what momentum now is, which says that currently the company is doing very well, right? And when currently a company starts doing well, typically it keeps wiping out the old deeds, which means that when we look at quality, we typically go and look at the last 5 years fundamentals, right? But if the last 1 year fundamentals start improving drastically, then obviously the 5 year numbers start looking better. So these companies typically have a possibility of a upgrade of the quality score, and hence they are known as the momentum now. So yeah, they are in the fundamental and technical momentum at any given point in time. That's momentum now. The second is turnaround, which is typically we don't look at how the company has been doing in the past. We look at if the company has given negative results and suddenly the company has started giving positive results. So that is a turnaround that we're looking at. A risky product, but turnaround can be multi-bagger opportunities because there is a sudden surge that comes in, and then obviously we put our due diligence on it that it is not some exceptional items that are coming which are giving this kind of a fundamental performance. But turnaround is a very, very high risk, high reward kind of a strategy. The third is reliable performers, which is very close to Mojo stocks, but it has a weight which is very high on consistency of near-term fundamental performance. So last 10, 15 quarters, the company is doing well, right? That's when we take the reliable performers. So, and mostly if the last 10, 15 quarters, the company is doing well, uska quality score bhi acha hota hai, and normally that company is very close to Mojo stocks. So some of the Mojo stocks can come in Mojo stocks and Mojo stocks can be very similar and all this stuff. But there are certain stocks that can be different. Mojo stock, which is our first product that we had launched, is a very restrictive list. It's like Oscars, right? It's a very restrictive list of stocks where you typically look at a certain sector, you look at a certain market cap, and you say, within this market cap, I will not take more than 5 companies or 7 companies. So sometimes when investors get confused that ये Mojo stock क्यों नहीं है, buy है, strong buy, Mojo stock क्यों नहीं है, क्योंकि within that market cap there may be 4 5 6 companies which are better than that. So a strong buy company, if it is not a Mojo stock, please still you can buy, because there may be another 5 companies which are better than that are sitting in Mojo stocks, and they are not coming out of Mojo stocks. So this company is not getting a chance to enter that particular list. So there is this difference that we need to know out there, which is very critical. Although, let me tell you, I would say around 85 to 90% of the top rated stocks eventually come into Mojo stock sooner or later. Once the queue becomes shorter, they will enter out there. So there is nothing to worry about. Some seasoned Mojo One investors of MarketsMojo also look at especially the stocks which are not Mojo stocks, because they know ये Mojo stock की list में आने वाला है. So people also look at that, but that's how the logic works across both products.
Okay, Mohit, that's it with the Q&A session for today.
All right. The New Year's offer is ending, so make sure that if you want to subscribe only through the webinar link. Don't use the links on the site. They are not for you. Webinars is a special link that we've got. I wish you all a very happy New Year in case I have not done that earlier. Please wish your families, your dear ones, a very, very happy New Year, full of health, wealth, and prosperity, happiness, and most important, patience. Have patience. With that note, thank you and good night.